Hi, this is John Persinos, Editorial Director of Investing Daily, with a video update for Monday, August 3rd. Investors are understandably confused. Stocks are rallying amid bearish economic conditions. We're witnessing a story of contrasts. Can the financial markets stay aloft in this bifurcated world? I wouldn't bet on it. Dismal economic data will eventually catch up with sky-high valuations. In the article that accompanies this video, I'll show you how to trade and still make money under these perilous conditions. In the meantime, let's recap last week. U.S. gross domestic product growth data showed its worst quarterly downturn on record. Initial jobless claims rose. Congressional negotiations over a new coronavirus relief bill stalled. And yet, Wall Street shrugged it all off. Stocks finished the week higher on better than expected earnings news. Stellar operating results from big tech companies added impetus to the rally, pushing the NASDAQ composite ever higher. Despite it all, there's an undercurrent of nervousness on Wall Street. Millions of Americans face financial deprivation and eviction from their homes. Fiscal relief from Washington is bottled up amid acrimonious deliberations. Doubts about the economy last week helped push the 10-year yield to its third lowest closing level on record and the 5-year yield to a new record low. The U.S. Commerce Department reported Thursday that U.S. GDP plunged by 32.9% in the second quarter on an annualized basis, the worst quarterly decline in American history. For laid-off or furloughed workers who somehow navigated an overwhelmed jobless claim system, extended unemployment benefits that were included in the CARES Act alleviated the financial pain. But guess what? Those benefits expired on July 31. An estimated 30% of Americans are missing their monthly housing payments and face eviction. Most industries have gotten clobbered by the coronavirus pandemic. The travel and hospitality sectors are just decimated. The oil and gas sector struggles with severely reduced energy demand. However, the globe's technology behemoths are weathering the pandemic. Indeed, they're thriving. Apple, Facebook, Amazon, and Microsoft all posted double-digit revenue growth for the 3 months ended in June. In the second quarter alone, these household tech names generated a combined $33.9 billion in earnings. The following chart tells the amazing story. Tech is benefiting from the pandemic as quarantines compels consumers to shop, work, learn, play, and socialize at home. But investors who think the pandemic will somehow wane in the coming weeks, well, they're sticking their heads in the sand. According to Johns Hopkins, about 1,400 Americans died from the coronavirus last Thursday, the most in a single day since May 15. On that single day, there were twice as many COVID-19 deaths in the state of Texas alone than in the 5 major countries of Western Europe combined. States are reimposing lockdowns. Millions of Americans are still too afraid to resume normal commerce. Small businesses are going bankrupt in droves. What's the upshot? I think a stock market correction is looming. It's on the near-term horizon. But you don't have to sit on the sidelines. That's the good news. In the article that comes with this video, I steer you toward a trading system that makes money regardless of economic cycles or ups and downs or pandemics. Well, that's it for now. I always welcome questions or comments. Send your correspondence to mailbag@investingdaily.com. In the meantime, stay invested, stay calm, and please stay safe.